Welcome back. And today I'm going to go over the most current housing update from Redfin. We can pretty much agree that the spring buying and selling season is pretty much winding down, pretty much over. Don't you agree? And usually every spring housing season, market season, we tend to see a lot of activities, right? It's very seasonal. So later this year, as we go into the summer, into the fall, we expect to see housing prices to median prices to be lower again because of less activity. I have to conclude that the spring buy season this year, 2024, is a little bit different. We begin the year in January and February a few months ago. I was hoping the mortgage rate comes down to like 6.5%. You can have some very elevated demand, purchase demand, and a lot of activities going to occur. However, since the mortgage rate continue to be very elevated, in fact, today's rates, according to Mortgage News Daily, for 30-year fixed rate for people with very good credit is already 7.4. So that's pretty significant, right? Would you agree? Well, let's go over the mortgage went back up 0.06 basis point from last week. And 7.34 with people with high credit score, 780 credit score, whatever, with 20% down payment. Imagine somebody who's a first-time home buyer, whether it's a 0% down VA loan or a FHA, 3.5% down payment, or a regular conventional owner-occupied loan for maybe 5 or 10%. People with less than 780 FICO score, people with even like high 600 FICO score, 650, 680, they're not going to be paying this rate. They're going to be paying most likely 8% rate. And again, that will price a lot of people out of the home purchase market. Not to reiterate that right now we have a very historical lowest affordability factor in history. I'm sure you've heard that before. So anyway, so let's get back to so the mortgage rate is just challenging. We are hoping for the rates in the mid sixes, but still over 7%. The mortgage rate is very stubborn, and hopefully, who knows, by the end of this year, election and all that, the mortgage rate hopefully will come back down to mid sixes, but I do not believe so. It'll be at least for the end of this year, at least 6.5 to 6.8% rate. That is my crystal ball, if you will. But and maybe next year, 2025, the rate might come down into 6.5 or even 6.4. Then the demand will peak up from that based on that scenario. So who knows? Just guessing, just like anybody else. So let's get back to the Redfin article. The headline is price drops hit highest level in 18 months as high rates dampen buyer demand. Okay, although this article was published today, May 30th, the Redfin is still days behind because they're quoting rate on this paragraph as high sixes, but which is 6.94%, which is a short while ago. Anyway, so more home sellers are cutting their asking prices, suggesting that sale price growth could soften in the coming months. But then this week, the median sale price rose to another record high. It was so funny. How often people in my business, we talk about breaking news, record high, skyrocketing, all this very off the chart information. It's just it's funny the way all these fancy words are being put out there into the social media. Nationwide, that still there's a lot of good news, right? Nationwide, 6.4% of all home sellers cut their asking prices at the week ending May 26th. Again, highest since November 22. And sale price growth could soften in coming months. Of course, spring buying season is pretty much over. That could be the reason. All right, great. Let's get back. For now, the median home sale price is up 4.3% year over year. Another record high. So you're going to see this word record high for the foreseeable future. That's the volatile housing market that we are all experiencing. So don't worry, it's fine. Long term, everything's fine. All right, so let me see what else I need to say. Again, the typical U.S. home buyers monthly housing payment dropped $2,812. It's lowest level in 6 weeks, but still, it's a record high. The monthly mortgage payment on the median price of a home has hit record high recently, about 6 weeks ago. Anyway, let us see. The market is lower than usual, especially the spring buying season, as I mentioned. But a well-maintained properties listed for under $1 million still get multiple offers. Okay, I know this is a location specific, said Christian Chan, a Redfin premier agent in the Bay Area where I live. Yes, that's where I lived in the Bay Area for many years. Yeah, we are receiving multiple offers on houses that are priced well, that are in good condition. Those two are very important conditions. Anyway, buyers, again, people cannot afford the median price of our particular location, especially in the amazing high cost area of California and Bay Area. They have to pivot, right? Buyers, they have to consider buying a home that they can afford the median price. They have to find a home that are a bit outdated, but don't need major renovations, or go to a lesser known, non-trendy neighborhood. That means you're not going to necessarily can get the best school district. Look, in the Bay Area, anything under $1 million is like almost like a fixer upper entry level 1,000 square foot home built in 1950 or something. Right? So that's what you get in the Bay Area. Is mind boggling. The prices, home prices, even what's going on in California. It's just, I know every location, every market is very different. Let me know, where are you watching this from? Like, what's going on in your particular market? I'm very curious to hear. So just comment below. Buyers who can get by with less space should consider a condo. They are relatively unpopular right now, and many are going under asking price. Okay, I know, in case you have not heard, the condo market, not just nationwide, but in particular in the weather challenged locations such as the coastal Florida and the coastal areas of the Gulf Coast, through the insurance crisis and HOA crisis and all that. So condo is not, I'm sure you agree, is not a robust asset class at this time. In fact, that could be a condo market crash, not just in certain areas of Florida and in certain areas of Texas, but even in California, you'll have higher insurance premiums as a result of the water-related conditions and HOAs. So yeah, condos are losing its value. I'm going to put together another video that will specifically talk about the condo market, particularly in the Florida area. So stay tuned to watch my YouTube channel coming up shortly. And all you gotta do is just like and subscribe this video and comment below, and then you'll see my other topics about the demise of the condos of housing market. Very interesting dynamic to say the least. Anyway, so let's go over the leading indicators. Again, mortgage news daily for today was 7.34%, right? It's over 7%. So as a result, demand is lower, and will become more listings as a result. Whenever mortgage rate gets higher, there's more inventory that's coming into the market. That's how the correlation is. Right. So let's go over anything else that in my mind. Obviously, mortgage applications has decreased down by 10% recently as a result of the higher mortgage rate. That's the lagging effect, according to Mortgage Banker Association. And the Redfin Demand Index has been down 12% since recently because of the higher mortgage rate. Everything about the rates, right? Foreign activity also has been down, which is unusual during the hot spring buying season. Again, I'm going to say the word all-time high. Median price nationwide is $390,000 in the week ending May 26, 2024. Year-over-year change, 4.3%. Again, all-time high. You can hear this word not only from me, but from many other YouTubers out there. Let me see. Yep. Mortgage payments, principal and interest, even without taxes and insurance and all that, is almost $3,000 monthly on a median price of about $390K. This is absolutely insane. That's why a lot of people can't afford, right? A lot of people staying on the sideline. Pending sales year over year is minus 3.4%. New listings year over year has increased 7.8%. Active listings is increased by 15.2%, as I mentioned earlier, right? Highest level since December 22. The reason why, again, the elevated mortgage rate has caused the decrease in demand. Therefore, active listings increases. That's how it goes. Now, here's the metric which I find the most important to all of you, right? Goes back to economics 101. When supply is less than demand, when the pent-up demand is still higher than the available supply, then housing prices either stabilize or goes up, right? And just to re-educate you guys, just to reiterate, 4 to 5 months of supply is considered a balanced housing market. A lower number indicating a seller's market. Nationwide, again, every local market is very different, right? The market, the months of supply is less than around 2 months. I think many areas of the Bay Area, in California, actually, California housing market is severely lacking in supply. Tell me what area or what from, comment below, what is the market. But nationwide, at 3.2 months of supply, it is still considered a seller's market. Seller's market means they will dictate the price and terms for the most part. So in a typical transaction scenario, you will probably see 2 or 3 or 4 or more offers on per house that are out there in market, especially if the house is well priced or in good condition and in good location as well. Those get multiple offers, 3, 4, 5, 6, 7, 8, 9%, whatever, 10%, depending on location, right? So 3.2% is still lack of inventory, lack of homes out there. So this may persist for a while longer, much longer than many of you would like to see. All right. Other than that, let me see what else. Let me highlight a few more things and we'll conclude. In areas, metros with biggest year-over-year increase, home prices are increasing in Orange County, Anaheim, Detroit, go figure, 16.4%. Nassau County in the suburbs of New York City, San Jose, where I live. Yeah, that's right. Housing prices, median prices have gone up year-over-year, double digit, right? 12.4% in San Jose Bay Area because of the lack of inventory. And people, the buyers out there, they have the means to buy. They are mostly high-tech people, or some of the buyers in the Bay Area, their parents are gifting them the down payment, which is potentially $300,000-$500,000 down payment to buy a medium price of a Bay Area home. Right now in San Jose and in San Francisco is approximately $2 million. That is totally insane. Now I've lived here in Bay Area for 30 years, and to me, it's not really insane, but for those of you that live in other part of the country, this is just absolutely mind-boggling. And the housing price is not going to go down because in the Bay Area, because go figure, right? Because you have a lot of very high income earners that are flocking into the Silicon Valley and even in Southern California as well. So you have people with the financial means. People you need to make about $500,000 income per year in order to afford a typical median price of a home in high cost areas in areas and in Southern California. So anyway, let's continue. Pending sales, again, following areas, San Jose, San Francisco, and in the Midwest, Columbus, Ohio, San Diego, and up and down California is doing well, but if you can afford it. New listings, San Jose have increased year over year. Wow, 34%. And yet the inventory supply of homes in San Jose is still less than 3 months, right? Still a very acute lack of supply, and demand is still very high for these high price homes in the Bay Area, which is anyway. So anything else I need to go over here? Metro with the biggest year-over-year decreases. A decrease, nothing dramatic, not less than 1% decreases in Dallas Fort Worth and in San Antonio. So this channel on this doesn't tell anything. Houston, all right, that's it. But only a mere few metros are down year over year in terms of medium sales price. Housing market is still pretty robust. Okay, new listing down in 10% in Chicago, down 9.4 in Atlanta. So these are, you can't make any of this. What's the reason why? So this is a short-term trends, which require more data before we can draw any kind of conclusion. Make sense? So let's go with the chart. Again, the past 4 years, much to the standards of the crash flows who's been predicting on a weekly, daily basis that housing market going to crash in the past 4 years. It have not. Housing prices continue to go up. So in the past 4 years, 2021, the prices down here like low 300. Now, year to date, the median prices are 400K. So you can see the systematic year over year for the past 4 years, median sales prices increasing. And let me see what else. Home buying. Again, look at this. That's why a lot of people cannot afford to buy a house. That's why historic affordability factor to buy a home is at an all-time high. A lot of people are being priced out. Look at this. Look at now the cost of waiting really is that kills the American dream. For the people that took action during 2021 or prior, there because the mortgage rate, historical rate, came all the way down to around whatever 3% 4 years ago. Right, people can afford the mortgage payment. So the monthly payment at that time 4 years ago, during the housing boom, 2021, it's a little bit over 1,500. For those, the rest of us, whoever you are, for whatever reason, did not buy in 2021, did not buy 2022 and 2023, and now for the same median home price that people that didn't pull the trigger a few years ago because the higher mortgage rate of 7.3%, now your new monthly mortgage with the same price point as 4 years ago is $2,812. It's almost double. The mortgage payment is almost double. See, that is my takeaway, the cost of waiting. Okay, I'm not saying everybody should jump into the market and buy, but you buy when you're ready to buy. Buy when your family situation dictate that you're in a position to buy, then do it. Go take action because you cannot find the market. It is time in the market. If you can afford it, if it's within your budget, you have cash reserve, you have a stable job, you're willing to stay in your house at least 5, 7 to 10 years, the house is good to go. Long term buy mindset is the most. So yeah, so everybody's situation is different. Many folks cannot afford it for whatever reason. So it is what it is. So each individual should take some personal accountability to determine whether we should buy or not. So that's my takeaway. So my takeaway for this particular article is that we've seen a lot of challenges, a lot of short-term volatility, but don't let all this negativity affect you. Then afford to buy as a primary buyer, do so if you are an investor, but myself and what I do, then it's never a wrong time to buy income properties. Anyway, as I conclude this and you see any value whatsoever for this video, please like, subscribe, and comment below about this information and tell me where you're from, what market you're living, and what is your local market conditions and situation. I would love to hear from you. And of course, if you want to become a risk investor, that's what I do. All you gotta do is put your email on my website below, and then you'll become a free member of our real estate investing community of several thousand free members. So every week that we providing this in free real estate investing information drop into your email inbox so you can learn, educate, and be informed so you can potentially become a real estate investor. Thank you so much for Seewing Yee. I will see you on the next video. Bye.